Wow, first in line. There we go, Lambus. Welcome everybody. How you doing? Doing good, doing good. Good day in the market today. A lot of fun. Had a great morning, so I got to play around with a couple people in voice chat in the afternoon. Made a couple bucks. It was fun. It was fun. How's your day? All right, on, right on. Good to see you. I was just got to respond to Zoom user and I have no idea who I'm talking to. Husky, how you doing? Lambus. This guy. Lambus is a savage. Welcome everybody. We're gonna give it a few more minutes. I've got to turn off the music. Carlito, how we doing? Welcome everybody. Give it a couple of more minutes, see if we'll get a few more people in here. Hope everybody had a good day. Pretty fun one. I love this kind of stuff. This is like, I wish the market did this every day. Make it easy on us, you know? Oh, there's bro. The bro's in the house. Doing good. Good day for me. Had some fun. Love a market like this. As today was just a sweet one. I love days like this. There's all kinds of cool things going on in the market, giving you some hints to some selling, all kinds of good stuff. I know I did a lecture here a few weeks ago on market internals, ADD, VIX, tick, and what they mean, some things that you can kind of look for with them. And it was awesome. Got a couple of DMs today saying, oh, I was watching those market internals right at open and had a feeling, I mean, you got to have more than a feeling, of course, but had a feeling that the market was going to sell pretty dang quick. And those market internals were very, very quick to tell us that that sell was going to come. And so it's always fun when you get to see some different things in the market working and how the market works and maybe make a couple of bucks while you do it. I can't read what that is. Zoom user. Oh, during questions? Yeah. Bring it up. Bring it up. I mean, I got no idea. What's PDF? PB. Oh, wait. Oh no, I'm thinking of PBR. Whoa, well, I mean, it's pretty obvious where you want to be involved in this trade. You don't want to be in it just yet, but kind of looking you know, just for fun. Definitely kind of looking bottomed. These are B bands. We're going to talk about these later. Definitely kind of looking bottomed. We got these things getting tight. We like to see that if you're looking to get in a trade to catch a breakout. I mean, I got no idea what this thing is, but if if there's ever a setup for a reversal, we're kind of staring at it right here. But you either want to take the real early entry down here with the tighter stop below 30, or you want to wait for some confirmation over this 34.25 and look for, I mean, you're basically just going to be high chasing, like I don't, I have no idea what this company is fundamentally. I got no clue what it's going to be up to. Um, but we get above this 34.25 and you got to believe that that 38.80 comes pretty dang fast. Oh yeah, I mean that 31 was likely the entry. It's even reclaimed this little one. So really anywhere down in there, that was going to be your nice zone for entry. You have this little micro trend break. Obviously, like I am not even trying to pretend that this stock looks good, but you got the major trend break, you got the minimal or the smaller time little zone trend break. Actually, uh, I mean, it looks ready to break out. But again, I know nothing about this company, but there you go. There's my analysis of it. I'd look for a break above that. Obviously, you don't want to expect this move to come in one day, but if you're gonna, I'm sure its option chain is very liquid, but maybe some shares or whatever, you got a nice, you got 10% move right here on some shares. That's a nice one. Okay, give me 1 second. Oh, Lambos, don't even talk about drug to me. I'm down a little bit. I took the re-entry on it. I got in there. I played like this bounce. It was nice. But then I took the re-entry somewhere down here, 25 bucks. And oh God, that's not good. I re-entered down here somewhere, 25 bucks. Yeah, on this one, 25, 25.50. Oh boy. Robinhood Port got a little smoked today. I'm just hoping we get back up there. Okay, welcome everybody. How we doing? Hope everybody had a great day. Dirty River tonight. We're gonna be talking some indicators. Some that, like I said in my post, some I'm sure you've heard of. Maybe you've heard of all of them. You've probably heard me talk about some of them. And so I just wanted to, indicators are great, but you want to understand what an indicator is, what it's actually representing, how can you base trades off it. And so, tonight as with all of my classes and at least how I trade, I tend to trade at least a little bit different than a lot of people do. So I like to just talk about the things that I am seeing, how I like to trade things, how I like to use how I like to use the different indicators, as and you're probably gonna hear me say this a lot tonight, as with all indicators, you can never just use one indicator as your only form of confirmation. It just doesn't work like that. I don't care if, we're at the daily 20 SMA. If that is your only reason that you're buying calls, I don't support that trade. You always need more reason. And you can find more reason if you actually understand what the indicators are telling you. We in one of my last classes, maybe it was last week, I don't know, sometime, we talked about trading strategies. Not so much, not really trading plans, but things that I like to look for using specific strategies, whether we did kind of scalps and swings and day trades, all of them. What are the things that I like to look for to give me the confirmation to actually get in a trade? Like, as an example, one of them was, a 9 EMA touch, a break and retest of the 9 EMA. Well, a break and retest of the 9 EMA is never good enough single confirmation, at least in my opinion. Does it work sometimes? Sure. But if you give me a break of a level and, increasing seller volume, and then you get the decreasing volume as we bounce back to the 9 EMA, you look for many different things and to say, okay, I have a lot of reason to get in this trade and thinking that the market is going to continue my way. And so, you know, we're going to cover indicators tonight, ones that I like, ones that I'm sure some of you have heard me talk about at least on a couple occasions, but we're going to try to get into a little bit more detail. What are these things telling us? And when we understand what they are telling us, then we can start to use them much more effectively, at least in my opinion. The last one that we're going to talk about tonight is going to be B bands. Obviously, they're they're advanced. They're very advanced. I read his book, Bollinger. He's a very good trader. He wasn't just a quant guy or anything like that. He was a very, very good trader. His book on Bollinger Bands is amazing, super technical. We are not going to get that technical, but we're going to talk about how I like to use bands, some of his ideas of using bands, and then just some things to watch out for him, or, when you're using them, some, strategies that you can kind of use around those B bands. Of course, you're going to want them backed up with additional confirmation, but they can just be a real powerful tool. And so again, welcome everybody. Happy to have you. I'll try to keep the chat open and pay attention to the chat so that I see questions as they pop in, because I got a feeling we're going to have some questions today. But the first thing that we're going to talk about, and this one is, I always talk about it in my EMA and SMA class, and we're going to actually cover two different EMAs tonight. I'm sure you guys can guess one of them, but then the other one that we're going to talk about, I always cover it in my EMA classes, and then I always get, at least a couple of DMs after the class asking me some more questions about it. And so the first one that we're going to talk tonight is, like I said, EMA combo, and it's the 5 and 13 EMA. And this is something that I have, I got a couple of screens, but I have a chart in the top right corner that I never change. And it has the 5 and 13 EMA on it. It has Bollinger Bands on it. And then it also has this custom script from my buddy that I just always have on there. I don't use the script a lot, but it is nice to take note of where these things are. But in any case, I always have the 5 and the 13 pulled up. And so they're a really strong set of EMAs, and they're a set of EMAs that very few people use. I use them all the time. And then actually when Tilio started doing the newsletters here about a year ago, he mentioned in there, so I brought it up to him that he uses them on a daily time frame. So we're actually going to start on the daily time frame before anything else. And so, like I said, this is an EMA combo that I love. And what are some different ways and some different things that I like to look at in regards to these EMA combos? And you have a 5 and a 13. So hopefully everybody understands what those mean. If you don't understand what that means, so this purple line is the 5, and then this blue line is the 13. So what does that 5 represent? It means it is looking back 5 candles. That's it. So this line, on the daily, this line on the daily is only going to print when the day closes. That's, when people talk about a lagging indicator, that's what they mean when they say all indicators are lagging. It's because this line can't be made until the data has been made. So it's always, just a little bit behind. So when you have the 5 EMA, you're only looking back over 5 days. That's when you're on the daily time frame, obviously. When you're on the 5-minute, which we'll get to next, you're only looking back 25 minutes. Well, the 13, now you're talking basically 2.5 weeks of trading is what that is taking into account. So they cross quickly. One of them is basically looking back a week, and the other one's looking back just over a week more than that. And that's it. So when you're above it, obviously, in simplest terms, the market is bullish. When you're below it, obviously, the market is bearish. Well, how do I use the 5 and 13 EMAs? Well, on the daily, in my opinion, there's really only a couple things you should watch. First, it is going to be an excellent trend identifier. This combo on the daily, very good trend identifier, very good at telling you the strength of the trend, and will very quickly tell you, are we going to chop out? Are we going to do anything? So what do I mean by that? Right here, we can see strong trend, riding the 5 EMA up. After one candle prints, this thing went sideways. After the next candle prints, this thing's sideways. So we're 2 days into this pullback, and we are basically saying to ourselves, okay, we're chopping. That's it. We're still holding the 13 EMA, but we're just chopping. And so we identified that early. And until this thing makes a dramatic shift up, we have we know the market is going to be sideways. So I love to use it that way. Purple obviously identifies the trend very well. As it starts to flatten, we either consolidate or get a small pullback. So great way to use it. Great way to identify that. Now, what are some trades we can take off of it? And one of my favorite trades, and this has been a bread and butter trade, as you can see this combo. And Lambos, if he's still in here, he uses a similar one, 8 something. His might be the 813. Another great one. Very similar thing. Obviously going to be a little bit closer to the 13, the 8 is, but very similar thing. So how have I been using the 5 and 13 EMA? I have been, we can see basically since here, October, 1 full year ago, basically 1 full year ago, I have been completely comfortable to be a dip buyer down to the 13 EMA. And how can we use that? We push up, and any of these pushes down towards the 13 EMA, I am interested in being long. Any push down to 13 EMA, I am interested in being long. It gives us a very defined stop. If we have a daily close below the 13 EMA, you stop out. So here's one. Even though you kind of could have noticed that the market was selling a little bit, here's one. Maybe you buy this dip for the swing. Market sold below it, bought above it. So you feel like, okay, whatever, I'm going to buy this. Well, the next day, market closes below it, $1.50 below it. That was your total risk in the end. And if you were buying this, you were really looking for a bounce back to these highs for $6 up or $5 up, whatever it may be. That was your risk. You got stopped out. Well, reclaim it. Trend is obviously still up. So you have to start to look to be a buyer again. Anytime we get back above it and are testing this 13 EMA, it has been an excellent dip buying opportunity. And then again, we've just had really awesome dip buy opportunities off of it, multiple, I guess not, we really blasted that upside, but multiple times to get long. Plenty of confirmation, no daily closes below it. So it's been a really good one for those dip buy opportunities. The next thing that I like is a cross. I love EMA crosses. For me, that's my favorite use of an EMA. I'm not a huge, short the bounce to the 9 guy. I like to see EMA's cross. It's showing a shift in momentum, a shift in volatility, a shift of who's in control. So I like to watch those when they happen. And how do I use it on a daily time frame? Well, I wait for, and this is a rough one, you know, like you don't get a solid cross here. Right here, you do finally get the cross, and we are below it. You even have a retest up, and this candle prints. We still don't have, you know, we still are crossed down. So I'm still looking for bounces to short until those cross back over. So really, this is going to be your entry on this day. The bounce up into here, and then your stop is going to be above this 13 EMA. That's great. You know, it's not, this is luck. You know, you aren't going to catch a $10 down candle typically off of these. But when you catch that break, I will, as you know, people heard me say in those in my trading strategies plan, I love the first retest of the breakdown. That is a trade that I will take frequently on EMAs. So we get across, and then one of these two is the first test of the breakdown. As I said, this $10 candle is nothing but luck. Don't expect that kind of thing. Well, then it kind of comes to the other side. You know, we've gone up, we've tried to cross, we failed, and now we've crossed. Well, this one doesn't really ever give us an entry. You know, there's not a great long entry based on these EMAs after the cross, really until around here when we get our first pullback to it. The issue with that is the momentum was so strong that these really got spread out. So your stop is instantly wider than maybe you want it, and you're gonna have to tighten up the stop to under the 5 EMA instead. Fortunately, this one worked out. So then I saw one more. I just glanced at this one. So because it doesn't always work, you know, like we're hindsight trading, we got to go look at the good things. Here's a cross. It prints the cross. We get the retest of the cross, whether it's here or it's here, and you get absolutely obliterated. So you have to, you know, you can't just use this thing as your one form of confirmation. You can't just say a daily close over this because you might get caught up in something like this, even though apparently we gapped down and you could have been saved a little, but you don't want to be the one riding puts for this whole kind of candle. So a cross is not always going to work, but really great thing to watch for on the daily timeframes. Those are my main uses for it on the daily timeframes. Again, even last or 2 weeks ago, you know, we're just dipping and holding these. Obviously, they went sideways early. We were expecting consolidation. So once you have a low set, we know we're dip buyers down here until those lows break. So really nice use on the daily. Any questions before we go to the 5-minute? Nice. Okay, no questions. Quick drink of water. So on shorter time frames, what can we look for? Same thing as larger time frames, but it's going to happen a whole lot faster. So today off the open, you know, whatever your bias was, who cares? You know, right or wrong, who cares? Doesn't matter. You know, day is over, but we get the cross down, you know, so we have our cross. So what am I going to look for? As I said, I am looking for the first retest. I have no interest in short here. I have even less interest in short here. And now I start having more and more and more. So I've watched this breakdown. I have watched this cross, and then we have seen this bounce up. And this, you know, we've seen this bounce up. We know where our entry is. You can short the 5 if you want. I think it's frequently best to see if you get a little bit of a push above it. I was actually discussing in voice chat today about, you know, when do you enter? Do you always wait for a candle close? Blah, 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 things like that. This is one of those examples where, and I had levels, there was more going on. Again, I'm just showing you what I saw in the EMAs to add as one more form of confirmation to take this trade. So we get the push back up. Our stop is a close above this, a close above 585. We know our risk. We have been watching for this trade for 20 minutes, and then we get the trade. So we get to short it. Obviously, maybe it works for us. Maybe it doesn't work for us. You know, second attempt, you can try it. I would have been apprehensive shorting this if I was only looking at these. I don't remember what was going on in the market exactly. If we had levels around here, only looking at EMAs here. If, you know, maybe you can risk this short, but you're already outside of what your stop would be. This one doesn't really offer an entry. Maybe you can take this entry here. But for me, based on these EMAs, again, we aren't looking at my levels. We aren't looking at anything else. We're discussing just the EMA analysis here. Looking at these EMAs, this is the short that I like on it. Then again, we watch the market. We watch the market. Maybe you ride it all the way down to here. Maybe you're out right here, like you should be, and like I was. And then we see a bounce. And then we see a nice bounce. and then we see a push up, we see a cross, and we're dip buyers. We're buying this dip. You can even be buying this dip. We aren't looking for much, we're looking for right here, and then we're basically looking for these highs. That is where we are looking, and this is only based on these EMAs showing you what to look for when a cross occurs. So a couple of nice trades, one really nice one, one halfway decent one. Then the next thing happens with EMAs, and what I always try to tell people, when EMAs go sideways, the market is chopping, and if you don't like scalping, you should not be in the market. You should not have money involved in the market. You should quit watching the market, because it's going to go sideways, and the EMAs have gone sideways at this point. So, and we had some trends and, blah, blah, blah going on. But at this point, when the EMAs are not pointed down and to the right or up and to the right, we don't care about the EMAs. So very unhelpful right here. And then obviously, maybe you caught this one, maybe you didn't. I got lucky into that one. Shout out Danny Grow if he's in here. Got lucky into that one, but not a lot of information from the EMAs. So that's how I use these ones. I use it as an additional form of confirmation of, say, a change of trend or anything like that. Some days you're going to get stuck in this kind of stuff or these fake breakdowns. You get the cross, you get the retest, and then you get blown out. So never can just use them as one form of confirmation, but a very, very good trend identifier. And we'll identify it early, and it will likely mean, you have the earliest entry opportunity based on those EMAs. So any questions? Let's see, Husky, nope. So the 5 on this, thank you for bringing this up because I discussed it on the daily, so we can talk about it here. This 5 EMA, it is only giving you data based on the previous 5 candles. So, and what the data is, it's telling you the average price traded with a bit more emphasis on the recent price action. That's what makes it an EMA. An SMA, they just take the close of the candles, divide by how many candles it is, and that's your SMA value. These ones actually put more and more emphasis on the closer candles. So the 5 is just the previous 5 candles, 13 previous 13 candles. And because of that, you're only looking back 25 minutes in the market with that 5 EMA, you get those crosses quick. It's telling you what's going on kind of right here, right now. And no problem. Always ask if you have a question. Okay, so that's it on the 513 EMA. Everybody got it. Like I said, just kind of a great scalping tool. Another really awesome additional, EMA combo to have in the tool belt. Okay, and we are good. So next one we are going to talk. This is one everybody talks about everybody talks about, most everybody uses. It's VWAP. I wanted to pull it up like this first, because a lot of people never see it this way. So when I trade VWAP, I take off what are called the upper and the lower band. That's these ugly, the pink and yellows here. I take those off. They're show you deviations, but not in a way that I care about personally. We're going to get into a deviation thing that I like later. So for most people, when they're using VWAP, this is what they're seeing. And it's going to be one line. The interesting thing about VWAP, let me get rid of my circles. The interesting thing about VWAP is that it is unaffected by time. Your time frame has no emphasis on, we got 583. Okay, I can't fully say that, but we got 583.49. Well, if we go to the hourly, we got 583.49. You will actually, if you go to the daily, we'll see, it should be like, I don't know, 4 or 5 cents off. So our EMA is 44 instead of 49. But generally speaking, doesn't matter what time frame you're on, it will always be the same. I do have to say that, some other brokers, Webull as one, I don't like their VWAP. Their VWAP doesn't ever line up with, your Fidelities or your TD Ameritrades, or I guess Schwab now, whatever. It doesn't ever line up. And that's because of how they do candle calculations and blah, blah, blah. Doesn't matter. But I love VWAP. And so what is it? Everybody uses it, but nobody really knows what it is. So it's volume weighted average price. That part doesn't matter, but you can kind of get the gist of what it is. It is telling you, based on the volume and the price, what is the average price over this day, that today that people are in shares at. So how I like to, describe it, and this is this is super simplified, and it's much much deeper than this because you never know what big money is actually doing in the market. But if we are below VWAP, that means based on volume and based on the price, people who bought shares today are losing money. If we are above it, people who bought shares today are making money. That's not entirely true. They could be shares, there's a lot going on in this calculation. However, we as day traders, the best thing that we can do to look at it is say, if we're below it, that means bears are in control. If we're above it, that means bulls are in control. Again, that's oversimplified. You always need to have market context, like you always need to have the context of the market in your mind as well. Today is the prime example. We were above VWAP here, and there were some scalps. I think we hit one of these in VC. We hit a nice little scalp on this. But you can't really fully be bullish, even though we're above VWAP, because we are over $2 below high of day. So trend is still down. Market is still, not red on the day, but red off the open, red off of that opening price. So how can we use VWAP to our advantage? And something that I do, and I know, and again, I do things different than a lot of people do. I don't personally use VWAP for entries. I like to use VWAP for targets because, just as an example, and again, we're hindsight trading, none of that matters. When we break below it, and this is, we're just talking generally in the market. This isn't, you can't just trade based off this kind of mindset. But when we break below it, that means the bulls they've lost at that point. So we can assume that eventually we are going to get a retrace to VWAP where the bulls try to save themselves. Maybe it was, maybe it was just these three candles. Maybe it was, way down here. Maybe you caught this retrace back up. You can't just trade based on, oh, we're below VWAP and way below it, I'm going to trade back to it. That will never ever work. But if we start to see signs of reversals, I don't know, maybe you like the 3-push wedges I've been teaching about, those kinds of things, and you need a target, VWAP can very frequently be a good target. I know some people like breaks and retests of it, things like that. That's just not how I like to use it. I like to use it as a target, saying, okay, the other side might want to get there to try to save themselves at least a little bit of pain, because at this point the bulls are in pain, and we can see the bulls showed up and like, I don't want the intraday bulls are in pain. Don't get me wrong, we gapped up, so the bulls are happy, but the intraday bulls are feeling some pain. So maybe that's where they want to take us back to. So that's one of my main uses for VWAP, is that I like to use it as a target when I'm in trades. If you're in calls on this, then you should be exiting your whole position. Or, I mean, maybe you hold a runner, but at this point, if you've got this move up, I don't care, if it's $1, $2, whatever, you've got the move all the way to VWAP after we've sold it and rejected it a couple of times. You want to be very, very cautious staying long, because there's a lot of bulls that just got themselves saved. And, people don't talk about this much, but, good traders, desk traders, high frequency traders at the firms, things like that, if they're long and they get to break even, they're exiting. If they're down bad, they're exiting. They aren't looking to make money. They are looking to remove the loss. That's what matters to them. Maybe they've added, and so they'll take some off and catch a little bit of a move up. But good, safe, reliable traders, I have a rule where I won't let the market go against me 2 times. If I'm in calls and maybe I catch this bounce, but I don't sell, well, this bounce, I'm selling, because I'm not going to let it go against me again. I don't care if it's $1 or $2 green on the second bounce. I'm taking it, So good traders will exit on that move back to VWAP. So always, if you caught the move to it without seeing a bunch of red, always, always, always reduce that position size. And so the best way, at least in my opinion, to think of it is it's a really, really strong support or resistance level that adjusts throughout the day. And You guys all know my theory on supports, resistance, trends, EMAs does not matter. Most breakouts fail. We see it all day, every single day in the market. So when we're seeing this break of VWAP, I'm not going to be the first buyer, and then we break above it. I'm still not going to be the first buyer in this trade. I assume these breakouts are failing. It's kind of the top of a range. So are we above VWAP? Yes, but the context of the market is not telling you to be long on this break of VWAP. So that's how I use VWAP. As I said, I don't really use it for entries. I use it to know where we're at in the market. If I'm in a trade, I like to use it as, kind of a final target to really make sure that we're going to get that bounce. Sometimes I do like if we, break below it again, you can take that first bounce to it. Or if we break below it after breaking above it, maybe you can try this little close above bounce, but still they just aren't personally my favorite trades. So does everybody get that on VWAP? It's just telling us based on volume and price, who's happy and who's sad. Okay, no questions. So going into the next one, and this is one that if any of you have ever been to any of my classes, you have very, very likely heard me reference this one. And it's obviously the hourly 20 EMA. I think it's one of Jay, you should send that message publicly because it's a great question. And I did address it, but I'm happy you're asking because that means not everybody's sure. Um, uh, if you're above it, you can theoretically be leaning long. But we see today the people who got long right above VWAP they got hurt, in the end, they got sold pretty heavy on. So you can't just use it. The next thing that I get into is going to give us even a little bit more idea of how we can use it. But you can't just say above VWAP and calls, below VWAP and puts, because maybe you get this kind of action where if your entries aren't good, you're losing money. Maybe you do get this kind of day where we're above, we're above VWAP and we just stay above it and away from it all day. You can see anybody looking for the VWAP retrace didn't get it yesterday, so that's why you can't just trade on those things. Again, maybe we stay below it and stay away from it all day long. You just never know what VWAP is going to do. Nice break, candle close, additional candle close, candle that to me looks pretty bearish and is a nice retest of the VWAP to get blasted, so because context of the market is up, so you can't just be short because it broke. Does the slope of VWAP matter? Yes and no. Here's a day, and I'm just, we're on a random day. Here's a day where you can see VWAP is flat. But if you can't make money on $1.50 bounces and $1.50 drops on SPY, I don't know what to say. So it being flat says that nobody's really like winning at this point, but that doesn't mean it's untradeable. VWAP pointed strong up, you likely have a pretty strong uptrend going on. It can also, be a gradual uptrend. Where's that big old sell day? This one, we got pretty vertical down. I mean, not vertical, but we were down and the market was selling. So it can show you those things. But as I stated, all indicators are lagging. So, it's kinking down on this one. But then by the next time the candle prints, it's done this. So, it's not going to tell you instantly. But yeah, I mean, if you are short, generally, you probably want VWAP pointed down. If you're long, you probably want to point it up. Here's a day where VWAP traders, you bought the dip, you got blown out, and a few candles later, you made money. You bought the dip, you got blown out, made money, shorted the rip or shorted the bounce or the break, got blown out, got saved, sold heavy, bought up. I mean, so you always want to be aware any EMA, SMA, VWAP sideways is giving you hint at ranging. Okay, and so next one, hourly 20. You guys know I trade it all the time. I talk about it all the time. It's one of my favorite indicators. When you couple it with the VWAP, that is a very powerful tool. And how do I use it? What are the things I look for? Sorry, I just got to pull up futures to see if they're actually getting clobbered. They kind of are. Not like bad though. SPY makes it look bad. So VWAP and hourly 20 together. And we're going to take VWAP and talk a little bit about hourly 20 after this. What I like to tell people, we have our VWAP. Below it, you kind of want to look to be short. Above it, you kind of want to look to be long. Well, pair it up with the hourly 20. If we are above the hourly 20 and above VWAP, both of them, you want to be in dip buying mode. If we are below VWAP and below the hourly 20, you want to be in short the bounces mode. If we're spending most of our time between them, or at least close, if we're spending most of our time in between them, treat it like a range. No questions asked, you want to short the bounces and you want to long the dips. And you can see here, like, yes, we broke below it. Anybody who chased this got obliterated. Anybody who chased this double bottom, obliterated. This is talked about in voice chat, and Flips asked me about it even. And, I would, of course, always lean double bottom because that's what I believe in. But it was at a point in the market where all the big names were either on support or slightly below support. So what I said to Flips was the market is either going to take a ripper or it's going to dump right here. And it chose to take a ripper. And so we have the nice double bottom here to obviously tell us that even this rejection up here, you can make the argument for the triple top, quad top, whatever it is. We're going to get into some ways to identify those a little bit more. But I have the hourly 20 and VWAP on every chart I look at. And it's just such a strong tool when you put these two together. So, I have, for my charts that I have up every day, I'm going to say them fast, but it'll be quick. Apple, Amazon, Microsoft, NVIDIA, QQQ, SPY again in another box, XLF, XLE. And those are what I look at every day. Then I also have ADD, Tick, VIX, but those don't have indicators on. So those are what I look at every day. And they give me the whole view of the market. And so I analyze all of them. If they are all above these, then I'm looking to buy dips. If they are all below these, I'm looking to buy rips. If they're short rips. If they're all in the middle of them, the market is ranging and I am treating everything as a range day. So the VWAP hourly 20 combo it makes it so you can glance at a chart for seconds and have a rough idea of what it's doing. You aren't going to find a trade in seconds. You shouldn't be finding a trade in seconds, but you can glance at it very quick and say, okay, we're stuck between the 20 EMA and VWAP. We saw it right here. I'm buying the 20 EMA. I'm shorting VWAP. I'm buying the 20 EMA. I'm shorting VWAP. Maybe I get blown out or maybe I get the sell down, I'm treating it as a range, no questions asked. And you can identify that very, very early. We saw right here, we're 1, 2, 3, 4, 5 candles into the day. We're between hourly 20 and VWAP. Buy dips, short rips. And it worked. I mean, it worked. Today was a very nice day for that, and so worked really, really well. And so that is the VWAP hourly 20 combo. If you take nothing else away from this, then take that away. It will help your trading. It is a very, very easy way to do whole market analysis and know where the market's at and know what the market is thinking. So going to take VWAP off the screen now and strictly talk hourly 20. Some things I look for regarding the hourly 20. Obviously, we just talked about the whole market analysis, but what are some things that I look for? How do I use it? And one of the main ways that I like to use it is, again, this is going to be kind of a, it's in a way market analysis, but it's what I like to refer to more as confluence. I want to see, and my study is even with VWAP. I want to see where both of these are trading in relation to those hourly 20s. So we got SPY and we have QQQ. And what are some things that I might notice on the charts and how can I use it to my advantage? And what does the hourly 20 tell me? Because, it is going to offer you entries and trades every single day. Some of them, some trades that I like. And again, you can never, ever, ever use one form of confirmation for a trade. But something I love to trade. You guys all know that I love to trade double tops, double bottoms, breaks, and retests. Those are my bread and butter trades. So one trade that I might look for that obviously doesn't work great, buy this double bottom. You get a scalp. I mean, this 20-30 cent move is going to pay you 20%. You get a scalp, you get to keep the tight stop under it. This candle obviously would have been the stop. So great one right there. You even had QQQ reclaiming it. So you had some reasons to be looking for the bounce. Well, what's the next one? We get the flush down here as QQQ is setting a big double bottom. So whether you trade QQQ or whether you trade SPY, we can see we have the confluence here. And yes, we've broken the hourly 20, but we're setting a very bullish setup into it. And our target is the hourly 20. So you buy the double bottom, you buy the dip, whether you're buying SPY or you're buying QQQ. I'm sure XLF and XLE were showing us things as well. You can never just say, oh, double bottom, I'm going to buy this. It doesn't work like that. You need more information. So that's two really good trades off of it. Then the next one that I'm going to look for is breaks and retests. You guys know I don't like to trade short, so I'm typically going to look for an upside break and buy the dip for the bounce. So it's going to be a break above it. Maybe I buy this dip with a close. Maybe you get stopped out here if you don't take your money, but like you saw nice green, you hardly even went red, and you're seeing nice green again. So hopefully you didn't take the stop out 4 cents below it, but you get the break above, you get the retest. So you try it. You also are getting the break above and the retest. Maybe you can try this one. You're only targeting, you're targeting recent highs, these kinds of things, that obviously work. So you're going to target those kinds of things. And then you have a very tight stop. That's what I always try to tell people. If you have strong selling candle, like this is an ugly bearish candle, you made money though. So if you didn't trim, it's kind of on you, but you made money on this bounce. But you can also buy this as the retest. Again, stops on lows, stops below these lows, 20-30 cents below you, or catch the bounce. Again, breakdown, maybe you buy the retest or short the retest rather. Maybe you short this retest and you use the hourly 20 knowing that it is going to be a very, very strong level. You have all of the information from the last 2 days of trading to know who's winning, who's in control, what's going on, and the bears are in control at this point. So you can have some additional information to say, okay, I'm ready to short it. Maybe you see this one. So you short this little micro. It's only a couple candles apart. I normally like about 4 or 5 candles between my double tops or double bottoms. But you only get 2 or 3 candles if you can try this short here. Stops above the highs, stops above previous hourly 20. You don't have much risk. So those are just a couple of things that I like to use it for. And we're going to remove, the double confirmation thing and just look at some individual charts. You can go back through the market. And one of the things that I love about EMAs, people have these like really interesting obsessions with back testing and blah, blah, blah. And there's like paid services for people to back test. I want something that like, when I use things, I like it simple. I like to be able to scan something with my eyes. And I like to say, how well does the hourly 20 work? If we break above it and if we break above it and we retest it, how likely is that to work for me? If we break below it and we retest it, how likely is that to work for me? And so I just go through the screen, EMA's sideways, it's hard to catch a move. EMA's trending up, EMA's trending down, easy to catch a move, but I like to be able to just scan through it and say, how often does a breakdown retest work on this? And the answer is very, very often, because we know a lot of people, a lot of those algos, a lot of the high frequency firms, those are short-term trades, 24 hours. I mean, most hedge funds, they want to wind up delta neutral, so they aren't making or losing any money all night long. That's the goal. So they will frequently retrace you to these hourly 20s sooner than later. And so I'm always looking for like, oh, could that be a double top? Yep, I'm trying it. No questions asked, While people are trying to probably tell you like inverse head and shoulders or some nonsense, we're short and double tops, we're short and triple tops at that hourly 20 because it works and it's so effective and it takes in enough information from the market that we can really use it. Killer skull, exactly. But you always have to take market context into account. And again, we'll just touch on that a little bit more because that is one of my favorite things about it. Oops, that was not what I wanted. Because that's one of my favorite things about it is that VWAP hourly 20 combo. If we're above the hourly 20 and VWAP, you frequently want to be looking long. Today is a day where downtrend day, we were still well below highs. We were basically in a range. That doesn't hold true. Most of the day we spent between it. So we stuck with that. And the whole day was spent in the range, you know? So you want to typically be long above it. You want to typically be short below it. And if we're spending most of our times between these two, then you want to treat it like a range. Again, if we're above them, we're retesting them, you can start to look for some upside trades here. Obviously, I made it very clear I was bullish going into yesterday, worked out nice for us. Again, you got VWAP crossing under it, use it to just analyze the market. Look at all the charts and say, it's such an easy one to go back test, whatever you want to call it. If we're above both of them, frequently the dip buys are going to work. If we got this going on, you can see mayhem, sideways, flat, very unhelpful. So, but above both of them, trend is up. Below both of them, frequently trend is going to be down. Okay, so that's going to do it there. And now we are going to get on to the final one. I wish we had a little bit more than 12 minutes on it. So just we might run long as we run into questions at the end. But so very final one that we're going to talk about tonight is B-bands. And what are B-bands? How do we use them? What are they actually telling us? The main thing that I like to always point out with B-bands, and I have, these are part of one of my charts that I look at every day. I am always very, very interested in what do the B-bands have to tell me. But they're hideous. So you don't want to look at them all day. They're the type of thing you kind of want to have tucked in like a corner, of your charts where you can glance over and say, hey, are we hitting a band right here? Maybe we'll reject, But what are these bands? What are we even looking at? How do we get them set up? So you can see on my chart, we got the blue line in the middle. We got two red lines on the top. We got two purple lines on the bottom. So I am actually running two different instances of these bands. And you can see the numbers in here, minus 2.0, positive 2.0, minus 3.0, positive 3.0, and then 20. And then simple for simple moving average. So what we're seeing here, the 20 is the length, same as any EMA, SMA. That's what this blue line in the middle is the 20 SMA. And what are these next two numbers? These are deviations, standard deviation, which we're going to get into very, very, very minimally. You guys know I don't like talking math. So we're going to get into these, very minimally, but these are telling you your deviations from your simple moving average in the middle. So that's what you see here. Each band, and I guess I should probably show you this just so you see it. If you run one set of bands, you're going to have a middle, an upper, and a lower as part of all of them. And then these are the deviations, which what a deviation is, and I'm going to make it very, very simple. They tell you the probability that data will occur and stay outside of those lines. So basically, in simple terms, what's the percent chance that it's going to close out, the candle is going to close outside of that line? And how can we use that to our advantage? Because, these are statistics. You guys know I love statistics. I love, probability things. So what these are telling us, when we are between, and I run two of them. So this is two standard deviations from here. This is three standard deviations from here. Well, how can we use that to our advantage? Well, two standard deviations, and I should say this isn't the normal this isn't normal standard deviation math I learned in Bollinger's book. Because it's using a moving average, it actually affects the math a little bit. But two standard deviations, we are being told that somewhere, it's more specific when it's just, set data and not constantly adjusting data. We are somewhere between 95 to 99% of data falls between here. It's between this lower one and this upper one. And so you can see when we push outside of them, we'll frequently recover a little bit. I'm going to show examples where we don't, though, because, as we get into it, you'll see why. So This band, when we are between the second and third band, we're ballpark 2 to 3% of candles will close in this range. You can see, obviously, sometimes it works, sometimes it works right away. Sometimes it takes a couple of candles to work. So we just know the probabilities and statistics say we aren't going to spend too much time here. That doesn't necessarily mean we bounce. It means we can kind of get outside of them and then just go sideways. And that's how we'll remove ourselves from that overextended deviation. Well, a lot of people, when they talk about these, they say, well, if it hits the third band, we should just buy calls. And sure, I mean, that can work sometimes. But B bands are showing us so much more than that. So you can use the deviations. You can understand when we push up into them, we might see a rejection. There's a good chance that we will see a rejection. However, they are showing us momentum. And that to me is where the real power in B bands come from. If I'm in calls for whatever reason down here, and I see us after making a big move, we've crossed the middle and we're pushing up to the top, I'm obviously going to be taking some of my position off because this is just too fast, a little bit of overextension. But where I really love B bands is something like this, where they go sideways and then they start expanding. And so, what is the expansion showing us? It is showing us momentum is building. And there's something that I'm gonna talk about it right here, because it's kind of an example. There's something that Bollinger talks about, and it's what he actually refers to as a head fake. So we can see market pushed up, rejected, and then these bands started getting really tight. Obviously, no momentum going either direction. Well, they start kinking out and they start kinking out. And you might notice that, we're pushing up. We look kind of strong. We look kind of strong. We're starting to see momentum increase on both sides, even though we're selling down a little bit. A lot of people might buy this dip here, thinking that we're going to take the bounce up because this is kind of showing us. That is what Bollinger refers to as a head fake. And what that is showing is, the momentum is picking up. We think the momentum is picking up. Probably people looking for a flag right here or something, even though it's a triple top. And so they're looking for, this momentum to pick up. The head fake gets them and we dump. Well, you can see here, if somebody bought calls here, maybe they made a couple bucks and instantly got blown out. If they bought calls here and were really on it, they probably made a couple bucks, but instantly got blown out. So this is a great example of where you see the momentum expanding and you catch that move. And then we see the momentum start tightening back up. So that is one of my favorite uses for B bands intraday. Also, if you are in a trade, and I'm going to pull up Micron because it's a trade that I was in today. So I was in Micron off the open. I swung it. And look at what Micron is doing. The people shorting this third band were getting roasted and roasted and roasted over and over again. And eventually, did they get a pullback that maybe saved? Nobody's just trading B bands, but they got a pullback that helped them, obviously, and then pushed back up. So don't just short the third band. People talk about it all the time. You can't just do that, especially on a shorter time frame. You always want to be cautious of that. Well, when can we start to look to short a third band? Because, statistics tell us that when we are outside, outside of this, there's less than 1% chance. We're going to get into the final thing at the end of this. We're going to even get into the fourth band and maybe how to use it. It's rare, but high probability it does not stay outside of the fourth band. Well, how can we use this third band or these bands to make some trades? The daily. The daily is where we can start to really look at some things and say to ourselves, okay, we're probably going to get a pullback. So I think it was on, oh no, it was this one. So Tesla is one that let's see if we can get we'll just clear that one. So Tesla is one that goes insane with bands, completely disregards them. I wanted to show it to you guys because Tesla is one that it will ride the third band. When it gets that momentum going, it will absolutely ride the third band, just hammering it every day, like closing at highs, gapping up, and closing at highs again outside of it. So there's times and there's places where this is not going to work. Where it can work very, very well is where we start to tighten up. So we can see here, huge momentum, big pullback, push to the third band, start riding this line. Well, now with the momentum tightening on the daily, this is where we can start to look to short these bounces. And, this one obviously worked great. Or even a pushing up into here, you're going to get a little bit of a pullback. We can see when momentum starts to expand, this is really our last opportunity. We try to short this one. Maybe it works, maybe it doesn't. And then as momentum expands up, Tesla begins to ride it. Well, other names like Micron, they tend to not ride it well. If they're pushing up into the bands, they're going to reject. If they're pushing up into the bands, they're going to reject, But of course, maybe you get some craziness. This one leading into ER on the back of some NVIDIA news. I remember this. But we pushed outside of the third band. That's when you can start to consider a short. Obviously, rode the second band, never really got overextended, was just controlled selling. Well, explosion outside of it. Back of ER, of course, so it is risky, but you have to look how extended outside of the third band we are. How can we use this? You short up here and you look for a retrace to the band. It ended up being a $4 move. You can't always expect that. And then today we see again, momentum. It's not really pointed anywhere. It's tightening up. It's technically going up, but it's not really pointed anywhere. We can see today 113.88, and if we come to our intraday charts, and let's see, 113.88, it did not like it. And that is where the rejection ultimately came. So you can find some really, really great, long time frame analysis with them of what things might want to do. And so final thing we're going to talk about, or no, I guess I got two more things on it. We're going to run a little late, as I said. One of my favorite tools, and this is something that I picked up directly from Bollinger. This is out of his book, and he does not refer to them as double tops and double bottoms. He refers to them, and it's funny, he refers to them as M tops or W bottoms. So kind of the same idea. It also negates the idea of head and shoulders or inverse head and shoulders, But how does Bollinger use this to potentially identify them? And you guys know that I love double tops and double bottoms, and I trade them all the time. So this is another tool that I will use to identify those double tops and double bottoms. And so what Bollinger says on it is, if you are trying to use, and as I said, he calls them M tops, W bottoms, whatever it is. If you are trying to trade one of those, you want to see the first bottom extend outside of the bands, and you want the second bottom to not extend outside of the bands. And so we just happened to look out on QQQ today, where we have two excellent examples. We have an extension outside of the bands, and we have no extension outside of the bands. So, if you're buying this double bottom, you're likely buying it here. You aren't quite buying it at the band, and the band is going to be your stop. So relatively small risk, and you catch that nice double bottom bounce. Well, we get the other side of it. Extension outside of the band, no extension outside of the band. After even momentum squeeze, this is very shortable, So double top, and obviously they aren't perfectly even. This one pushed above it, but you could even talk about that one too, kind of a triple top really. But you get extension outside of the bands, you get no extension outside of the bands. And so what you might notice here is, an even double bottom is great. Are they always going to be to the cent? Frequently not, because this double bottom is not only a double bottom, but although it is minimal, let's see, this one, we had 491.50. This one we had 491.60-ish. That is technically speaking a higher low. So we see the same thing here. You push up to here, and now you don't push into it, and it is a lower high. So you're okay shorting it as the lower high double top. So that is one of my hands down favorite things to use it for. And then so final thing we're going to talk about, and this is for scalps. This is for very quick trades. That's all it's for. It's very rare. You are also being risky because frequently when this occurs, it's news related. So you can be fighting news. However, it's the fourth band. And so this is 4 standard deviations from that, R20 SMA. And that's the normal setting. That's the setting, in my opinion, you should use on Bollinger Bands. It's the fourth band. So the chance of the probability of something sitting at that fourth band and actually closing there is 0.006%. So basically nothing. Very, very low probability that you will get a close on a fourth band. So it almost always provides a bounce. I think I hit one the other day. Oh yeah, it was this one. It was this morning. Nvidia this morning. This is the fourth band. I mean, I didn't even put more bands on. This could be the fifth or sixth band. I will long this every single time. I would have loved it more if it was at a level. I would have, maybe there was some other SMAs or EMAs or something there. However, we know that there is a 99.994% chance that this bounces. So it's a trade you can look for. Do they happen often? Absolutely not. There's one, not a very good one, but you still made money. So they're rare. I went for Nvidia because it's volatile. And so it'll make those volatile moves. This is something you want to look for on, well, Tesla's been just horrible lately. But Tesla, when it's in its wild moods, it's doing its $10 move days or $10, in a day moves, you can look for it and it will almost always provide it. I mean, these are very, very great. B-bands are a really great tool for volatile things that react to those statistics. Big blowouts, it's wonderful. I mean, these things are amazing. Same as the second and third bands. They will react because there is so much volatility and momentum behind those names that they can be great on, your Nvidias. Well, back when AVGO was expensive, Nvidias, Teslas, all those really fast moving names, they're really, really good tools. Okay, so that is it. That's the indicator lecture. I know we ran a little long. Thanks everybody for sticking around. I appreciate it. If there's any questions, we can of course talk about them. Let's see, I already missed one. Tim, I'm assuming you're why not the hourly 9, 5, or 13? Because the 20 is better. It takes in so much more information. And you and I have talked, I've tried a lot of them. Al Brooks recommends the 20. And so that was when I really started, 5, 6 years ago, I really started playing with those different hourly EMAs. And nothing is as good as the 20. So I stick with the 20. They work opposite on crypto, then I don't think you're quite understanding them, unfortunately. Any more videos you can watch as a beginner trader? Yeah, hop in my tab, look at pinned messages, and you will see my beginner series pinned as a YouTube as a YouTube playlist. Shout out Raphael if he's in here. Thanks again for doing that. Ignorant trader, yeah, there's a lot that goes into that question, but things like double bottoms, you buy when the double bottom is presented to you. And so that can be mid candle. I much prefer if we get a close down at the double bottom, and then I'll buy the open of that next candle. Maybe I'm looking for a break and a retest. I'm going to look for that break, and in an ideal world, I want the candle to close about where I retest. We had one today in the voice chat. Let's see, which one was I on? We had one in the voice chat today where we were trading up here, and then I said to everybody, I'm like, look, we've broken above my important range and we can take this band off. I said, we have broken above my important range. And right here, I am telling him, we want a knife down to the 83 or 83.7 to 83.77 zone. And we want to buy calls there. I had my limit order sitting and waiting right here. And so that's where I got filled. So it all depends on the trade, how you take it. Oh, I see what you're saying there. This is Jack, right? I see what you're saying there, Jack. Okay, that makes more sense. Armando, thank you for being here. Mr. AMD, thank you. Hourly 20, maybe okay, fine. Sassy. How do I find the hourly 20 moving average? It's pinned in my tab and it'll be multi-time frame moving average. Right on, Cookies, thank you. Oh, there we go. Wu-Tang is for the children. No, target is always based on somewhere on the chart. These ones, my first trim was this low. My next trim was right here. Because we're coming into the trend. So you're all out of that trade. And then they did push more afterwards and I complained about it, but that's it. What's my thought process when I go to into a trade? Nothing. I want to have it planned before we get there. I want to have it planned before we get there. And so I'm going to look for as many forms of confirmation as I had. This is one, unfortunately, I can't share all of my charts. We had Apple, Amazon, Microsoft, NVIDIA, all slightly above support. So we wanted a small push down. So all of them were at support at the same time. And we buy calls. And I don't remember what kind of, we can always just look. Oh yeah. So I remember this now. So we bought this dip. First target was all of these EMAs and VWAP. That's what it was. And we knew first breakdown after breaking above all of them. First breakdown, we kind of want to plan on selling. You know, a lot of people make the argument, oh, you're above all the EMAs. Well, we're coming in a strong support on SPY. We're coming in a strong support on all of the big names. And so you can feel comfortable buying those calls. And you know you're buying calls here, stop is outside of it, and maybe you get blown out and you have to, stop out maybe mid candle or whatever it is, but your entry is here. And I'm lucky and I've traded long enough that I have confidence in my levels. I mean, I trust them. I've used them for ever, years and years, so I just trust them. And that's something that can only come with time. Right on, SK. Thank you. Yeah, Mr. AMD, they're epic. And you'll like those B bands as you start watching them more and more, they're a real good tool. Awesome for volatile names. Awesome for catching bounces. Even another I think it was Cat like years ago. So I love the bands when we start getting really like on the daily time frame. And you guys know that I love I think it was this one. You guys know that I love scalping ranges, and trading ranges because it's just easy money. And so, oh yeah, right here, it still has the box around it. This push up to these vans and push up to the top of this box and knowing we're entering every single push up, and we were trading this one heavy. We're entering every single push up here for so long, just watching these bands get tight. And then when we finally ended up pushing down, and then we take the push back up, which ultimately in the end ended up being the head fake. But we ended up catching this whole short down here when was this? Oh, last October. Imagine that. So when the vans are tight and you get to just treat it like a range, I mean, you could have even been buying these dips and scalping these rips up, and the bands just make it so apparent that the momentum ain't going in any direction. You are going straight sideways. Bands going straight sideways. They're amazing. The 5 and 13 I just use as their own combo. That's the best way. That's the best way for me to use them. If I want to see those other ones, then if I want to see those other ones, then I use them, you know, I'll just use the 920/50. I prefer that one if I can. I wouldn't add the 50 to it because I'm playing the 513 cross most of the time. So I'm not super concerned with what the 50 is doing at, you know, when I'm trying to play a 513 cross. Let's see. So fight and time decay is just tough. Entry is everything. If you're trading same days, you know, chances are you aren't fighting time decay nearly as much as you think you are, and you're actually fighting a not ideal entry more than anything else, you know? You know, people right here buying calls or puts were complaining about time decay. People who were buying calls on the dips and buying puts on the rips were perfectly happy because the money was being made. Frequently, it's not time decay. Frequently, it's your entry was in the middle. You know, you want those entries at highs and lows. I know it's always much more difficult when you're trying to trade, when you know real life trading, when the market's actually moving. But entries in here, people are complaining about time decay. Entries on these dips to the VWAP, and I'm just using a random example. Entries on these dips to the VWAP paid nice. Entries on these pushes up to the top of the range, those paid nice. You know, I mean, a 40-cent drop on a same day halfway through the day is going to pay you 30%, 40%, you know? So frequently, it's not so much time decay, it's really just your entry is what the bigger issue is. Yep, Mr. AMD, exactly. Getting those you know, getting those entries and seeing the momentum kick in. That's one of the best things about B bands is that they show you when the momentum is coming in early. You know, they'll start to kink after one day of high volume, high momentum. So really, really good tool. Okay, well, if that is gonna do it, we'll call it a night here. Thank you all so much. Yeah, right on, man. Okay, thank you all. We will see you all tomorrow, Friday. Trade safe, you know, don't ruin a good week on a Friday. And if you got any more questions, always feel free to shoot me a DM. Okay, right on, everyone. Have a good one. Catch you later.